What's up everybody, welcome back to ICT Trading. I'm not feeling too loud at the moment, so I'll be talking quite softly for this video, but nonetheless we've got a few topics that I'd like to cover in this video, and we'll be using the trade that we took last Friday on the Dow Jones, the US 30, where I sent through my thoughts on Discord and hinting that this was the trade I was looking for. I'm sure you know we've got the executions to back it up, so I'll just turn those on right now. And you can see that we've taken our first entry down here. We've managed to capture a few partials along the way, and by the end of the day, one at midday, which is the London close, and at the end of the trading week, we've taken off our final partials. And overall, this looks like a huge move, but in reality, this was only around 100 or so points, but still, considering our stop loss was only 20 or so points, that is still a very decent amount of return considering the risk that was involved. And the main topics that I'll cover in this video are trade timing. So what this one means is if you find an RMR setup, for example, if you found a RMR setup over here in the Asian session when there's not much volatility, then obviously those key areas in mind are very unlikely to be reached. So instead, if you found a trade during a New York session or London session, then since there's much more volatility then, you'll be more likely to see a strong reaction from your RMR setups. I'm not too sure on the layout of this video, but I'm just going to go through how we saw this trade, and once we've done that quite quickly, I'll go through these topics and how it related to this trade. So of course the pattern we use is the RMR pattern. So first we look for a raid, and under this swing low, when price reaches under, we can call that the raid. And we know that the raid is just another word for a short-term manipulation leg before a larger move in the opposite direction. And I've just zoomed into a 1 minute chart, and so after this bearish raid, we look for a market structure shift bullish to break a swing high, and we can see we have a few swing highs over here. These would be very short-term market structure shifts, but nonetheless it is still a bullish shift. Finally, after this market structure shift, we have a return area, which is in the form of a gap, which is this little blue box over here. And so as price retraces into that blue box, that's where we can place our long orders. And I'll just show you guys some screenshots that I took, and these were part of my journal. So here on the first screenshot, I've written a note here about sentiment, and we'll talk about sentiment later in the video, but long story short, the sentiment on the Nasdaq and the S&P was very bearish. And I'll just go back to those markets very briefly, where you can see on Friday the sentiment before New York was very bearish, so making lower lows and lower highs, leaving all this buy side liquidity just left untouched. And then in the note I said to expect a bullish pump, to look for a bullish RMR pattern, and that the Dow was currently the strongest. Which means if I decided to find a bullish trade, I'd be wanting to execute on the Dow. And here there's just a very rough depiction of a bullish RMR. You have that raid, a short-term shift, and then a return before a pump. And here in the next screenshot, you can see that I've marked out that raid, that market structure shift, and that gap that we've got over here. So I was very ready for this. It was anticipated prior. And these screenshots that I put in my journal, you can see that they're taken at 9:24 and then at 9:28. So these aren't screenshots taken in hindsight or using a replay function. These are screenshots taken live. And these are the types of things I put into my journal. And so over here, I had my limit order set in this gap over here. And you can see that price retraced right into that gap, into that return area. So technically my limit order should have been triggered. However, you can see I don't have an execution here, and so I couldn't participate at this price. So then I was just watching this move go on and on without me and leaving. But as price was pumping up, we still had not reached those main objectives. So if I was given the opportunity to re-enter at a certain time, then I'd be willing to take that trade. And so I've just zoomed onto the Nasdaq, and here on the 1 minute chart on the Nasdaq, you can see a clean RMR potential setup, where first we break some swing lows, so this would be the raid, then we break a swing high, this is the market structure shift, and inside that market structure shift we have a gap once more, so this is that return area of the RMR. And you can see as price retraces into that return area right at 9:41, instead of placing your bullish RMR trade entry on the Nasdaq, because we know that the Dow is the strongest, at 9:41 we should be placing our entry on the Dow. And once again, I've got a few screenshots here that show my thoughts during this time live. And here on the Nasdaq, there's a note saying there's a bullish RMR forming, there's the bearish raid, bullish shift, and this is that return area, and that this would be my second chance to enter on the Dow, which was currently the strongest. And so my plan was to enter on the Dow when Nasdaq reaches this gap. And in hindsight, if Nasdaq just continued pumping and didn't reach this gap here, I wouldn't have had my entry on the Dow. But we know what happens, and at 9:41 I took my next journal entry screenshot, and this is the exact time that I entered on the Dow. So if you're wondering how I got my entry over here at 9:41, this was completely based on a timing entry approach using the Nasdaq. Because if you look to the left, there's no gap in here. There was a gap over here, but this one was filled, so it's no longer valid in my eyes. Although on a 3-minute chart, in hindsight, you can see that there is a 3-minute gap in here. So when price retraces into there, that could be your return area and your entry. However, I'm not going to tell you that this was what I saw, because I didn't see this 3-minute gap. I was too zoomed into the 1-minute chart and I was looking at the Nasdaq. But using the Nasdaq, we still managed to find our entry. Alright, so I think that kind of covered missing your entry and how to enter. Long story short, if you miss your initial entry, if you wait for a retracement that is in a discount when you're placing a bullish trade, as long as your final objectives and your main objectives haven't been reached, then that would be an appropriate way to get into your trade. What I mean by waiting for a discount is if I drew a fib from any single swing, so from the bottom of this one to the top of that swing, when price retraces below 50%, that would be a discount. Once again, if we move on to the next immediate swing, we have this bottom, this top over here, and so this retracement is under 50%. Once again, the next immediate swing, we have a low here, a high up there. It would be ideal to wait below this 50% level before trying to enter. So for example, I'll just draw this very brief bit of price action. You can tell immediately that this entry here would have been in a discount. It retraced deep enough. This one would have retraced deep enough. That's in a discount, but this one is not in a discount. It would have retraced too shallow. So if you're dying to enter, at least wait to a discount and don't enter and chase price at a very expensive or premium price. Wait for that deeper retracement. Okay, so now that we've got our entry position, I'll go through my partials and my objectives very quickly. And my first partial over here, we've got some relative equal highs. The second one was my key area, and I'll just turn on my labels so you can see my partial amounts. So my first partial, I took off 30%. My second partial at this weekly high, this was the key objective in my mind. I took off 60%, so this was my main objective. So by then I left 10% to run and reducing my stop loss to break even. And typically we know by 12 o'clock midday New York, which is the London close, volatility tends to drop off, mainly in forex markets, but this is quite common in the indices as well. At 12 o'clock you can see I took off an additional partial, and my final partial was taken off at the very end of the day. So that completes this trade, but I'll talk about these topics over here and how it relates to this trade. But first, if you'd like to take a naked screenshot of the chart so you can outline the RMR yourselves, here you are. Alright, so the very first topic that I wanted to talk about is trade timing. And I mentioned this very briefly, but there's a very good example that happened on Friday. So in hindsight, you know that the trade entry we used this raid on this low over here. However, what if we didn't use this as our raid? What if we used these lows over here as our raid? And when price breaks through this area, we can call this the raid as well. And after the raid, we can also find a market structure shift. So it breaks a few swing highs immediately after. So this is a very decisive market structure shift. And not only that, this market structure shift also left a very clean gap underneath. So in essence, this RMR setup is actually very, very clean. A clean raid, a very decisive shift with a very clean return area. So when price retraces into this return area and we place our long with our stop at the bottom of the raid, you can see that this entry would have just been stopped out and ran on afterwards. And this is the type of thing that happens most often when you're not aware of your trade timing. And if we look at this RMR setup, our entry would have been around 8:30, which is 1 hour prior to the equity open at 9:30. So the point is, when we have a very key timing event, whether it's a news event or the equity open at 9:30, those are the specific times of day that are generally saved to inject more volatility into the market to reach key areas. If you saw this 830 RMR setup, very well done. This was a very clean one. And if you took it on the Dow, even better job. Dow was the strongest at this time, but unfortunately, this trade didn't pan out until that 9:30 equity open. Alright, next topic would be market sentiment and how this played a part in finding our daily bias. So as I mentioned on the Nasdaq and the S&P, price before the equity open, before 9:30 is obviously bearish. And here on the S&P, price is also obviously bearish. What this means is that most of retail is placing shorts since they love to follow the trends. And as a result of an influx of shorting, that just leaves buy-side liquidity or liquidity resting above the market at a surplus. So there's a lot more buy-side liquidity since it's being left untouched, since all the sell-side liquidity is constantly being raided. And here on the Nasdaq, all this buy-side would be left untouched and all the sell-side is being taken. So just with sentiment in mind, if all the buy side is being left untouched and sell sides being taken, it'll be a very reasonable anticipation to expect a bullish move in price to take out this buy side liquidity. Because all the shorters in here, they'd be trailing their stop losses, whether very tightly or leaving them at swing highs. This is where a lot of the liquidity is resting. So just with that in mind, if we want to capture the move that breaks the sentiment, we want to be looking for a buy. And when we start to apply two factors together, so looking to buy to break the sentiment as well as a timing factor, so around 9:30. So if we look for a buy around this time, just a quick example here on the S&P at 9:30, if we're expecting sentiment to be broken, we could say that we have a raid over here, a market structure shift, and we don't have a gap on the left except for this one over here, but that's been filled already, and that was filled before that market structure shift, so this can't really be our return area. However, we can use a fib, and like I showed with the discounts, if I draw a fib from the bottom of that swing to the top of that swing, price retraces below 50%, so you could place your entry in there with your stop loss at the bottom of the raid and objectives above. And in hindsight, you can see that some short-term swing highs were broken to break the sentiment. However, it was not broken as deep as you may have wanted. So that's basically how I use market sentiment. It just gives you an idea of what most people are doing, and you can either look for a reaction to take out what the trend was doing, or you can wait for that sentiment to be broken before looking for a continuation. Okay, only two more little topics to cover. I'm pretty sure we've mentioned how to enter if you've missed your initial entry. So the next topic we'll cover is relative strength, and I talk about this in pretty much every video at this point, but it's definitely one of those topics that really needs to be drilled into your head, otherwise you just won't take advantage of it. Just really quickly, this long on the Dow, you can see we have this very strong bullish movement with our entry at around 941. And here on the Nasdaq, if we had our entry at 941 right over here, you can see that we have a very lackluster bullish move. And once again, on the S&P, if we had that entry at 941, once again, a bit more of a bullish move, but nowhere near close as to one that we saw on Dow. So if you're looking to long the market, would you rather long the S&P at this trade? Would you rather long the Nasdaq and capture this move? Or would you rather long the Dow and capture this move? Of course you'd want to long the Dow, right? That's why I don't have any entries on the Nasdaq or the S&P. It's because of relative strength. It's not because of luck I chose this market, and it wasn't a very difficult choice either. Because if you remember, Nasdaq obviously was bearish during the day. S&P was the exact same thing, maybe a little stronger, but Dow on the other hand, instead of making lower lows and lower highs, Dow is making a range. So there should be no doubt that the Dow is much stronger. I'm actually doing a live stream today since everyone voted for Monday, and I'm positive that during that live stream I'll be talking about relative strength and how to apply it live. But the point is, when these markets are looking very, very similar, then relative strength is not as important to take advantage of, since the move that you're trying to capture will be similar in size across those markets. However, when things are so obvious, like this bearish movement on NAS, this bearish movement on S&P, and this obviously not bearish movement on the Dow, when things are so obvious, it only makes sense that we do that relative strength analysis to choose which market to participate on. Alright, that brings us on to our final topic, which is limit versus market orders. And I've just got a question here from my Discord that relates from Lazy Days, and he mentioned that when I do a relative strength analysis at the time of the entry, if I've already got a limit order in that area, then how would I know which market would be the relative strongest or weakest at that time? And so this is a great question for when markets are acting very similarly, but when there's such a big difference in relative strength, like the Dow is much stronger, then if I had a limit order, then before I'd even place that limit order, then I'd choose to place that limit order on the Dow instead of the others. And when the charts are very similar and all three aren't that different, you could find a fair price in your return area, whether there's a gap or anything, and you can set your limit inside there without too much regard for relative strength. And some other times that I may use limit orders for my entry is when I know that I'm either not going to be in front of the charts, or like we said before, if those three markets are moving very similarly and there's not too much difference, setting a limit on any of those three in your return area would be okay. However, when it comes to partials and take profit areas, if you're trading on MT4 or MT5 and you're using a hedging account, there's simply no way to set partial executions unless you use an EA, and I consider myself pretty old school. I just set alerts on my brokers, and as soon as those alerts go off, whether it's a price based or time based, so this one was at 12 o'clock and this one was at 13, whenever those alarms go off, I go into my broker and I take off a manual partial. And same thing for this entry over here. You know that I took this entry at 9:41, which was based on the Nasdaq. So on the Nasdaq, I'd outlined this gap area. I'd set my alarm as soon as price retraced into that area, and as soon as that alarm triggered, I'd know exactly what had happened on the Nasdaq, and I just place my order on the Dow. So I'm very old school, but I'm sure that if you had an EA that would be able to take off partials automatically, that could be very, very helpful. Alright, I hope I answered your question, and on that note, I believe we've covered most of the topics I wanted to talk about. I hope you guys enjoyed this video or learnt something new, and if you did, leave a like and subscribe. It makes me very happy. And today, most likely during the late London session or New York session, I'll be starting the live stream since you guys have voted for Monday. I'm still very surprised you voted for Monday since there's absolutely no high impact news then, and Monday is typically the day we use for analysis and not the day for trading, but you guys voted for it, so that's what we'll do. Down below. If you have any questions, leave them down below. I hope I see you guys in the live stream, but until next time, take care everyone. Peace.